I just want to say thank you all for being here, everyone that is watching us live. I'm Allison Denise, your creative accountant. We have Ms. Jamila Stroud and Ms. LaKanya Murray on the line. We are so excited to be here, and we apologize for these technical difficulties. Like Jamila said, you know, sometimes it's just bumps in the road you have to get over, but we are going to get this information to you, come heck or high water. Are you ready, Ms. Connie?
I am ready.
All right, so let me go ahead and make you the presenter. There you go. Get started when you're ready.
Started when I'm ready. So hello, everyone. My name is Attorney LaKanya Murray. I'm going to share my screen with you guys because I have some great information that I want to share with you. Here we go. Possibly not. There it is. I bet that's going to work. I can be smart when I need to be. There we go. All right, can everybody see the screen?
I can see it.
Everybody got it? Hopefully this works out the way that it's supposed to be. So thank you so much for joining us tonight. As Allison said, we came to you to present this great information. I know if you follow me on Periscope or any of my social media channels, we ended the year talking about creating strong foundations for our businesses. So when Allison approached me about this opportunity to present a webinar, I jumped on it because I know this is information that the three of us together are presenting that everybody can use, okay? And so we're going to go ahead and jump right in it because we are running a little behind. And here we go. So what I'm going to talk about tonight, I'm going to explain business entities. What I find is that a lot of people are going into business and they don't know how to choose the right business entity for them, the one that's going to give them the most protection, the one that's going to achieve the goals that they're really looking to achieve in their business. And some of them are really just starting foundations or starting business entities simply because other people are doing it. And that's not a reason to do anything. Okay, so before we get started, let's see how this works. Oh, there I am right there. So that's me, LaKanya Murray. I am the small business attorney. I have a practice here in Montgomery, Alabama, Off the Mark IP Solutions, where I help people in the fields of trademarks, copyright, and business development solutions. I started this practice about 4 years ago, this particular practice about 4 years ago, for the simple reason or simple purpose of helping people like you, people who are in business or new to business, who need the advice and help of an attorney, but may not be able, or may think they can't afford an attorney, for one, or two, might be a little intimidated because you haven't found the right match, someone that speaks your language. And so that's why I created Off the Mark IP Solutions. I'm also a best-selling author. I've written 30 Days to Launch, which is a checklist of legal and business basics that every new business owner should know before they open their doors, and it's available on Amazon. And so that's just a little bit about me, so let's just get started. There are 4 types of business entities, and I'm going to start with the sole proprietor, because the sole proprietor are what a majority of business owners are, because people don't realize how easy it is really to be in business. They think that going into business requires some kind of work, additional work, but all it really is the exchange of goods or services for something of value. So if you're in business selling a good or service for money, you don't have to do it full time. Even if you're doing it part time, you're in business. You are a business. Okay? And chances are, if you hadn't done anything else but just started selling goods, you're a sole proprietor. Because a sole proprietor is one person doing business with absolute control of the business operations. It's just you. You are the business. There's no separation. There's no distinction. A lot of people who are sole proprietors, they might operate under a trade name, which is basically a doing business as. So your name might be Larry Watkins, but you are doing business as Watkins Constructions. So, but that's still you. There's no distinction between you and the business. So, if something were to happen to you, if your goal was to create a business that you can pass down to your family as a legacy, this is not the business formation for you, because you are the business. When you go, the business goes. The good thing is it's quick, easy, and cheap to start. So like I said, all you really have to do is pick up some, start selling goods, and you're in business. One other thing I want to tell you is, because you are the business, any debts, any business debts you have, we're going to attach to you personally, because you and the business are one person. So when they sue your business, they're really suing you. So you're not able to go and get land or any assets in the business name, because you and the business are the same. And just because you can just pick up and start the business without any formal paperwork, does not mean that you don't have to obtain your proper licenses and permits, because you still have to get those licenses and permits. You have to check with your local county and your state, or even federal, depending on what business you're in. And so the next business entity I want to talk to you about are partnerships. And there are 3 types of partnerships. Now, partnerships are really just like being a sole proprietor, except for now it's 2 or more people. So you have the general partnership, the limited partnership, and the limited liability partnership. Let's jump into it. If I'm talking too fast, someone let me know somehow, because I do have a tendency to talk fast. I'm going to try to slow down. So the general partnership, what it is, like I said, is 2 or more people working together for profit as co-owners. Just like a lot of people are starting businesses and don't realize it, a lot of people are in partnerships and don't realize it. And to me, that's a really scary thing, because just like with a sole proprietor, how you're responsible for all the business debts, now as a partnership, you're responsible times 2, or however many people are in your business, because each partner has the authority to bind the business. And if you are the business, that means each partner has the ability to bind you. Okay? Some people say that's a benefit, because now you have help when you're running your business. So your limited partnership, this is for those people who talk about being silent partners, who want to invest. Maybe you have like a family member or something who wants to give you some money to help you start your business, with the intentions of them getting that money back. So they're what you call a silent partner. This person invests money into the partnership, but they don't have a say-so in how the business is run. So that's why they're called a silent partner. So the benefit to this is really for it helps you to get people to help invest in you, but they don't have to worry about being bound to any debts the business has. So just like when I just talked about the liability that the partners have to bind one another, for the limited partner, that limited partner is only responsible for the money they invest, the money or the property that they invested in the business. So they won't be out any more than what they put in. And so the final type of partnership is called a limited liability partnership. And the limited liability partnership is really great for those that are professionals. Matter of fact, sometimes some states only limit the LLP to professionals, like doctors and lawyers and accountants. And what that essentially does is it allows them to work as partners, but it makes them so that they're not liable for one another's negligence, which is great, especially when you're in that professional field like that. So you have the general, the limited, and the limited liability. Give me 1 second. Okay, this is what I really want to talk about tonight. I spent a little bit of time here. and it's corporation versus LLC, because there's a huge misconception that a corporation is better than an LLC, or a corporation provides more limited liability than an LLC. And I'm going to talk about that and tell you the real deal between the corporation and the LLC. And what you have to realize is that the corporation was really created because to separate the business owners from their businesses. Because like we talked about with the sole proprietor, the business and the business owner were one, so they weren't able to really take risk like they wanted to in order to help the economy. Because if you're afraid that you're going to be sued personally, how much risk are you going to take? What kind of chances are you going to take in your business if you're afraid that if I make this deal, I won't have a place to live? Or if I make this deal, I won't be able to feed my family. So they came up with a corporation. It's been around for over 100 years. The corporation has. The owners of a corporation are called shareholders. And this is, you're going to find out in just a minute why this is important. So the owners are called shareholders. And this is what you have to know. This is what shareholders have no control of the day-to-day operations. Okay? That's out of their hands completely. That responsibility actually falls to the corporation's officers. So their presidents, the president, the vice president, the secretary, whoever they, and when I say they, I use that word very loosely. So whoever the board of directors appoint as officers, they're the ones that control it. So, recap. You have your owners that are called shareholders. They don't have a say-so in how their business is ran. That is the responsibility of the officers. The officers are appointed by the board of directors. Every corporation has to have a board of directors. Each state sets a minimum amount of board of directors that a corporation must have in order to be formed. And those board of directors are elected by the shareholders. Okay? Let me go back just one time. Perfect. Okay, so when I think of this right here, the situation that we just talked about, so you have the owners who have no control of their day-to-day, and it's ran by the officers who are controlled or appointed by the board of directors. The first thing I think of, I'm just going to tell you, is Steve Jobs. How he was voted out of Apple. He was fired from the company that he built. It was a corporation because the board of directors and the officers said that he wasn't a fit. He was fired from the company that he built. So that's the thing that I want you to know. When you have a corporation, you don't have any control like you would any of the other business entities. And I'm just going to briefly put this up here because this is not my area, but I do want to let you know that because of the fact that now legally the business owner is separated from their business, that caused double taxation. Jamila's going to get more into that. That's her lane, not mine. So now, over here, they have this new entity, and I say new because it's almost really as old as I am. I just told y'all how old I was. My bad. My bad. But it's 1977 is when it first was adopted here in the United States. It's actually we copied it from Germany. It's a formation that they were using, and Wyoming was the first state to actually pass legislation that enacted and enabled the LLC the way that we know it today. And this is the thing. It provides the same limited liability as a corporation. And if anybody tells you otherwise, they are lying to you. I'm going to say it again. An LLC provides the same limited liability as a corporation. Okay, we got that? And on top of that, it eliminates the double taxation. What? This is one of the reasons why this formation is so popular. You have major corporations using this as a business entity. You have corporations like Amazon and BMW and businesses like that who are using LLCs. And that's probably because of this next reason. So in the LLC, your owners are called members. Members can choose whether or not they want to control the day-to-day operations. And so when you see forms that ask you whether or not you're a member managed or member managed or manager managed, this is what they're saying. They want to know who controls the day-to-day. And since the owners are called members, if you are the owner and you control the day-to-day, then you're member managed. And so you can either choose to do it yourself, or you can elect certain members. So let's say there's several of you guys. Maybe there's 2 or 3. Maybe one person is really good at taking care of the day-to-day, and you want that person to be in control of the day-to-day. You can elect to have certain members or even non-members. Okay? So the main difference, the reason that companies, like I know Amazon went from LLC to a corporation, is because of this right here. Because only a corporation can issue stock to attract, which, you know, that attract investors. The LLC cannot. And a stock is simply a share of the company's ownership. So I don't have much time to get into it, but I want you to know that, like I said, the limited liability that everybody's looking to get, because it's very important that you're, as a business owner, that you're able to take control and take calculated risks in your business. You got to take those risks in order to grow, in order to accomplish the goals that you want to accomplish. And if you can't, then why are you in business? So this limited liability that everyone's seeking to get, you can get that from the LLC just like you get it from the corporation. The reason that people love the LLC is because they get to stay in control of their business. Now, I will tell you there are some things that will take away your limited liability. There are some things that you can do as a business owner that could put you at risk personally, such as, and I'll just go into it very briefly because I know that my time is running up. Just to name a few. You hear me tell you all the time to keep your business and your personal separate. If you are a corporation or LLC, it's a must that you keep your corporation and your business and your personal separate. And just one more thing about the corporation I didn't put on here. The corporation is required that you meet at least annually, that you have an annual meeting. And in those meetings, you have to take minutes, and you have to keep up with your meetings and what happened in those meetings. Okay? And if you don't, and someone alleges that you acted outside of your business, your corporation form and formalities, and you don't have the documentation to prove that you didn't, that can be a reason to pierce the veil. They call it piercing the veil. But that's all the time that I have right now. I hope that this was very helpful and that this answered some questions for you. Actually, I know that it was, because a lot of people, they don't know. And the main thing you want to know when choosing this is that the LLC and the corporation have the same limited liability. No one has any stronger limited liability than the other. The only difference, the main difference, is that the corporation can issue stock. That means you can offer a share of your company to someone, and LLC cannot. All right?
All right. Does that conclude your presentation, Connie?
It does.
All right. Well, thank you so much for that. That was great. I mean, a lot of information, but a lot of good information, so thank you. Jamila is up next. Let me take Connie off of presentation mode and thank you, Jamila. Are you ready, Jamila?
I hope I'm ready. Are you making me pretty good?
Yeah, here you go.
Yeah. All righty. Thank you all for joining. I'm Jamila. I'm an EA, and what is an EA? An EA is an enroll agent. I don't work for the IRS. I actually work for you, the taxpayers, the business owners. An enroll agent, what we do is we have unlimited authority to represent clients all across the United States. We are very few with unlimited authority for representation when it comes to any IRS tax matter. So if you have any tax matter, no matter where you are in the U.S., I would be able to assist you with any of your tax-related matters. As you see my who I say I am, and you can take some time and read that. But I'm also the owner of Into Financials, and I've used my wealth of experience. I've been in business for over 7 years. I started in business very young as just a tax professional, but I continue to advance and get more education so that I can serve clients on a higher scale and in a more effective and efficient way. I've also been featured on Fox's News in Birmingham as a business expert in my actual field. So I want to talk about 3 different things. First things first, entities and requirements, and I thank Connie for laying that foundation so you all can have some background information on entity and requirement in the entities, but I'm going to deal with it from a tax perspective and what it looks like from that end, and I'm also going to talk about some business expenses. Also, let me know if I'm going too fast because I will start talking really fast. So first things first, we have to establish if we're in business or are we operating a hobby. And what does that mean? A business, that term I coiled, I don't know if the IRS coiled this or I think I coiled this term, is if you're in pursuit of profit. So to be in business, you must be in pursuit of profit. And you also, and this is per IRS, is you should make a profit for at least 3 of the 5 years that you're in business. But if you're not making a profit, that does not mean that you're not in pursuit of profit. So a lot of times I hear people say, or business owners say, well, you can only take a loss for 3 years. Well, that's not true. If your business did not make a profit, but if you were in pursuit of profit. Okay, so as I said, so you all see this now, first things first. And we're going to discuss entities and requirements and business expenses. So first thing first, again, I was talking about the business or a hobby, if you're a business or if you're a hobby. And you must establish that to know if you're a business or a hobby. But the IRS, what they will require is for you to make profit at least 3 of the 5 years that you're in business. But again, as I said before, if you don't make a profit, that does not mean that you're not in business. That doesn't mean you're doing a hobby. If you don't make a profit, that just means that you probably need to do something different. But as long as you're in pursuit of profit, you are still in business. Now you have a hobby on the other side. The hobby, what makes you not be in business, but you're actually performing a hobby if you're not in pursuit of profit. So you can be in a situation where you like to take pictures and you love taking pictures and you went out and bought you a nice fancy little camera, but you're taking pictures and you may take some pictures here and there, but you're not actually putting yourself out there as a photographer. And so that means that you're not in pursuit of profit, even though you may make money, you may get money here and there, but you have to distinguish business or a hobby. And per IRS, for a business, you must be in pursuit of. The next thing you need to do is determine federal tax obligations, and that's something you have to determine. Is cut out the different structures of your business. So you're going to determine the federal tax obligation. You also need to obtain your federal business tax ID or EIN. That's another step that you need to take. And then you will also need to determine your state tax obligation. A lot of people don't realize that you must actually get things done on the state level as well as the federal level. I know a lot of people start business and they think that just because they have their state tax ID number, their federal tax ID number, they're great, they're good to go. But you also have to do some things on the state level. Each state has different requirements and different things that you have to do when it comes to your state. So that's something you have to definitely determine to understand before you actually just start doing business. I was in business for I think like it was 4 years before I found out that it was a form that I was supposed to be filing with the state as an LLC. I wasn't filing a form and I was being penalized because I just didn't know that I needed to file this form every year. And I was being penalized, I think it was $100 every year because I had no clue that I needed to file this form with my state when I did my tax return. So you make sure you understand your state obligations as well as your federal obligations. Then you need to determine your tax year. You have two different tax years. You have fiscal and you have a calendar tax year. A calendar year is from January 1 to December 31st. That's a calendar year, 12 consecutive months, January 1, December 31st. A fiscal year is 12 consecutive months, but it cannot end in December 31st. So if you have June, and it doesn't have to end on the last day of the month to be a fiscal year. So those are, so let's say you have a situation where you started your business in June of one year, let's say June 15th. So 12 consecutive months, I think it's June 15th of the next year, your business, that'll be a fiscal year, that'll be a whole year that you were operating your business. So I want to get into just some of the tax implications for the entities of sole proprietorship. All sole proprietorships, you must file your tax return on a form Schedule C or Schedule CEZ. This is attached to your 1040. Because the sole proprietorship is not a separate entity, you are the business is you, the money that the business makes, you are the business. So all of that will go on your individual tax return. When you file your 1040, you attach a Schedule C or a Schedule EZ. Yes, a Schedule CEZ. A limited liability company, when it comes to filing taxes, things that I really know that a lot of people don't understand, as a limited liability company, you can file your taxes in 3 different ways. You can file your taxes as an S corp. By default, if you have one member in the limited liability company, default, you'll file as the S corp. If you have 2 or more members in a limited liability company, default, you'll file as a partnership. But you can have 1 member in a limited liability company, and you can file as an S corp. You can file your taxes as an S corp, and it gives you more separation between your business and yourself. But there are some guidelines, but you're still a limited liability company, but you're filing your taxes as an S corp. And I advise this when your business start making at least like $50,000 to start filing as an S corp, because it gives you a lot of, when it comes to tax, it's a tax shelter for your business. So it's the things that you can do in your business financially from a tax perspective that you can't do as a sole proprietorship or as a partnership. As a partnership, Connie talked about the different forms of partnerships, but it was one that I want to talk about, just because she talked about the other ones, is a joint venture. And a joint venture is actually what Connie, myself, and Allison, what we're doing now. This will be a partnership. You write up a partnership agreement just for a specific thing. It's just for a specific thing, and the funds are disbursed however you come up with the disbursing funds when it comes to that partnership. But a partnership, again, is still filed on it's a pass-through entity, and the tax return is filed on the income passes through to the partners, and it passed through on a form on a Schedule K1. So all the income, it goes through. The partnership doesn't make money. There's no double taxation with the partnership. It doesn't make money as a partnership. The money is made by the actual members, and they get a K1, which is also attached to their Form 1040. So they'll add that income on their 1040 from their partnership. Let's deal with an S corp. An S corp is the form. A lot of limited liability companies are when they establish, they're taxed as an S corp, but an S corp was created so they're not a corporation. They don't have the double taxation, and it's a pass-through entity as well. So it kind of helps you more so on the tax side to have an S corp, because there's some things that you can do with an S corp that you can't do with the C corp, and that you definitely can't do with the sole proprietorship. So it actually gives you more protection, I guess, no more liberty from a tax perspective. And again, an S corp is more of a tax thing. And also a limited liability company from the IRS level is a disregarded entity. So from a tax perspective, a limited liability is it's almost like non-existent, because you're going to have to file as a sole proprietorship, or file as a partnership, or file as an S corp when you have a limited liability company. So the next thing we want to discuss is some business expenses, because I know a lot of people around this time, when you operate a business, you're wondering what are some expenses that you can take, what are some things that you can write off for your business. And I'm just going to go over a few, because there's so many business expenses that so many things that you can deduct as a business owner, but I'm going to go over a few. Education and training for your employees or yourself. So let's just say that this was a paid course and you had to pay for this. You could have wrote this off as a business expense, because this is education and this is training for you to educate yourself to run your business more effectively and efficiently. You can deduct the tax preparation fee for your business return. So if you go out to your EA or your accountant or your CPA, whoever does your taxes, you can deduct those fees. License and regulatory fees paid annually to state or local government. So if you have to pay for a business license, you can deduct those business license fees, and any other fees you have to pay to your state, you can deduct those. We also have penalties paid for late performance or non-performance on a contract. So if it was something you were in contract with someone and you didn't perform, or you performed late, you can also write those penalties off. Subscriptions and membership to trade magazines or professional organizations. So there's a professional organization that I'm a part of. It's called NAEA. It's National Association for Enrolled Agents, and I can write off those subscriptions because those are memberships, something that I subscribe to as for a professional organization. I'm probably sure Connie is part of some memberships or some things for her in her field as well. And then you have supplies and material used during the year, and this is probably an easy one to know. So any supplies or material that you use during the year that's for your business, you are able to write those supplies and materials off during the year. And I want to just make sure, and before Allison come on, because she's going to get into the bookkeeping side of it, but just make sure that you're keeping records of this information. Is going to be so important when it's time for you to do your taxes. If you have some kind of system, and I think Allison is going to share with you some kind of system that you can have in place for you to keep records of these things, because when you come into an office and someone asks you, okay, well, I know a lot of business owners are trying to do their business by remembering things in their head. And I know I did business like that for a time, and that just didn't work out for me. It didn't work out for me to remember things in my head, because when it came to January of the next year, I couldn't remember what I had paid for. Or if I paid for it, if I had a receipt, if I didn't have any form or system for keeping my records, I didn't know what it was for. So I may knew how much I paid for something, but I didn't know what it was for. So just make sure that you're keeping those records of those expenses. And again, I'm Jamela Stroud, EA, your Lifestyle and Business Foundation Engineer. I hope that this information was very valuable to you, and it's something that you can hold on to if you have any questions. I don't know, we're going to do a Q&A. If you all have any questions, we'll do that Q&A at the end. So Allison, I'm turning it over to you.
All right. Thank you, Jamila, so much for all of that good information. That was very helpful. I'm learning while I'm sitting here watching y'all. Let me take you off of presentation mode. All right. So it is my turn to share. I'm so excited. Let me make myself the presenter. Just one moment. Let the slides load while we're waiting on that. I'm just going to go ahead and introduce myself. I am Allison Denise, the creative accountant, and I am so pleased and happy that Jamila and Connie decided to join me on this and bring my vision to fruition. I just really thought, gosh, we have so much information that these people can use, and a lot of it is difficult to find and understand when you're reading it on your own. So it just really helps to have someone who knows the business to kind of explain it to you. So I'm glad you're here. I hope you all can see my slide moving along just fine. I think you can, so I'm going to just go right ahead and let you know that I am creator of a Facebook group called Purposeful, Paid, and Pretty, where we share tips, information, and affirmations on how to keep your coins in check. I'm also the #1 Amazon best-selling author of Smart Women Manage Their Money, Tips for the Girl Boss. And like I said before, I'm excited to be here. And in the essence of time and all of the technical issues that we've had, I am just going to keep on trucking along here and start with my first point. So my first point is for your money management systems. To set up a smart money management system, the first thing that you want to do is lay the foundation to receive your money. And what does that mean? You need a place for your money to go, right? So before you take on your first client, I mean, it doesn't help to take on a client and accept payment if you don't have anywhere to send the money to, right? So Connie and Jamila have already talked about the legal setup and all of that and getting your business registered. So what you would do is you probably also have a DBA, and you should have your EIN, your Federal Employee ID number, Employer ID number, excuse me, which you can get online for free in case you didn't know that. So you would take all of your legal registration documents, your DBA, and your EIN number, and you would take it to the bank. So those are the core ingredients to open your business bank account. And you can do this with a physical bank in person, or you can open an online business bank account. So you would take that, and most banks also require a minimum deposit. Sometimes it's zero. I've seen 25, I've seen $100, just depending on the type of account you're opening. It could go all the way up to thousands of dollars as your initial deposit. So, definitely you want to search and look around and find the one that works best for you. And when you do that, you take those documents over to the bank. So if you're a sole proprietor, obviously you won't have as many documents maybe as a corporation or an LLC, but anything that was used to form your business and make it legally registered is what you will want to take with you when you go to the bank. Obviously, along with some picture ID like an ID, a driver's license, or a passport. So why would you do this? Why go through all this trouble of having a separate bank account? It's just one other place to go get deposits and ATMs and all this extra stuff. What's the point, right? So there's something to be said about having a separate bank account that is designated strictly for your business transactions, because it keeps you organized by keeping your business money separate from your personal money. All right, and that saves you time and money during the year. It saves you time and money at tax time, because you don't have to sift through all your personal transactions, which are probably more than your business transactions, to try and figure out, was this a business transaction? Well, what did I do with this? What was this for? And then it saves you a lot of time. And if you pay somebody else to do it, right, paying premium prices for a penny task, I mean, that's just not smart business, right? So if it saves you money if you do it yourself by just separating the transactions out to begin with, and then you don't have to worry about paying someone else to sift through all of that data for you. And then at the end of the day, it also acts as a record of your money in and out. It's like a little transactional journal for you, all in one. Your bank keeps the transactions for you. You can download them, so on and so forth. So that is the first step in laying the foundation, your money foundation for your business. The next step is to lay the foundation to track your money. All right. So how do we track the money that's going in and out of our bank account? we set up a bookkeeping system. And so there's lots of ways you can do this. Some people choose to use Excel, some people use pen and paper, some people use nothing at all. And I don't recommend any of those. Although if it works for you to use paper and Excel and you just can't seem to get into a software, do what you can. As long as you're keeping record, you're still doing something, and something is better than nothing. Okay? I'm sure Jamila can tell you that, and I'm sure she already said this, that it helps to have your documentation in place to show, in case of an audit, what happened, what was this money for, where did it come from, and where did it go to. And that's what your bookkeeping system can do for you. So I have a couple suggestions for entrepreneurs and small business owners, two of which I use personally regularly. And the first one is Wave Accounting. Wave Accounting is the bomb. Can I just say that? I hope I can say that. Well, I love Wave. There are several reasons why I love Wave. Number one, it's free, okay? And number two, it's just great. It's user-friendly, and it's a great accounting software for service-based businesses. And what do I mean by service-based? Service-based businesses do not need to track inventory because they're not selling products, right? You're exchanging time for money, if you will. Or, yeah, basically that's it. So you don't have to track inventories. Now, Wave, you cannot track inventory in Wave. So if you're like a retail store and you have merchandise that you sell, you're not going to want to use Wave because you can't track your inventory in Wave. All right, unless you want to use a totally separate inventory tracking system and then have two systems, which, you know, again, is not always the smartest thing to do because then you have to make those two things talk to each other. So that's Wave, right? Again, Wave is free. It's great. It's user-friendly. Take note. All right. Next one, QuickBooks Online. Who hasn't heard of QuickBooks Online, right? Okay. QuickBooks is great too. I love it. I've worked in it for years. I was certified in it. You know, it's a great software. It's Wave kicked up a few notches, right? And there's certain versions of QuickBooks where you can track inventory. And there's so many other things that you can do, from time tracking to just, they have a whole hodgepodge of reports that you can run to find out how your business is doing. So QuickBooks Online is like Wave to the 10th degree. But you may not need the 10th degree, okay? I know for me personally, for my own business, I have two. I use Wave. My clients tend to use QuickBooks. And it may just be a personal preference because they're more familiar with QuickBooks, or maybe who knows what it is, why they choose to use QuickBooks sometimes. But Wave is good if you're service-based. QuickBooks is good if you want to take it up a notch or if you need to track inventory. And then we have a couple other alternatives, one being FreshBooks and the other being Xero. So let me just say first, Xero is very similar to to QuickBooks. They almost look alike sometimes too. But personally, I prefer QuickBooks. And that's just a personal preference. And that may be the determining factor for you when deciding which bookkeeping software you want to use. It becomes a personal preference, right? So the other one is FreshBooks. FreshBooks, to me, in my personal opinion, is not so much a bookkeeping software. It's more geared towards time tracking and paying bills, accounts payable. And the reporting in FreshBooks could use a little work as well. Like when it comes down to printing out your financial statements, if you're taking it to a bank that you want to invest in or something, or if you need to print it out for tax return time, FreshBooks reporting could use a little work on that end. So it's not bad, but it's not my favorite either. My favorite is Wave. My second favorite is QuickBooks. So what else I want to tell you about this? Wave is free. QuickBooks is reasonably priced. It's maybe $12 a month or something starting out. Depending on how many features you want, the price goes up. But what I want to tell you is this: don't be intimidated by software. There are ways to automate your bookkeeping and put things on autopilot, okay? So don't be intimidated by software. And just remember, think about what your business needs are, and then try these softwares out. Most of them have free trials. Try them out, see which one feels good to you, and use it. Just pick one and use it. Okay, that's the important thing, is to take action and use a software. That was point number 2, in laying the foundation for the money foundation for your business. And my final point tonight is lay the foundation to build your money. And what do I mean by that? Establish business credit, right? Okay, so you've got your business bank account set up. You've got your bookkeeping software ready to go. What's next? Build your business credit. Especially for those entities that Connie and Jamila have just told us are separate entities from you, right? So if it's a separate entity from you, it can have separate, just like it has a separate bank account, it can have separate credit from you, all right? So your personal credit might be shot. It might be shot, but you might have a better chance at building business credit and getting credit for your business through your business, all right? So I suggest starting to build that credit before you need the credit. Build it before you need it, okay? And how do you do that? So here's one suggestion on how you can build your business credit when you're first getting started. So we're going to keep our business and our personal transactions separate, right? So one thing that we're going to need for our business is a phone line. Well, you can get yourself a business cell phone in your business name with your business EIN, your federal identification number, and pay that bill on time every month. I cannot stress that part enough. You want to build good business credit, right? Not bad business credit. Get a phone line in your business name with the EIN. Make sure it's with a company that reports to the credit bureaus, all right? And do that for 3, 6, 12 months. And a year from now, you're going to have credit history that people can use in case you need to go get a loan or get some other form of credit for your business. Now you have history already before you actually needed it, right? So get you some business credit, pay your bill on time, build it before you need it, right? So this is just the core. We haven't talked about how to automate your bookkeeping. We haven't talked about creating a business budget or a profit forecast or how to track your expenses and your receipts. But these are a few things. These are a few things that you can do today or tomorrow or whatever the case may be to set up the money business foundation for your business to make it successful. And that, ladies and gentlemen, is how to build your foundation right. Let's have a little Q&A, why don't we? So I know that we are in the chat on the Google Hangout page. We're also in the chat on the Facebook event page. What questions do you guys have? Let's discuss it. Let's talk about it. I'm going to take myself off of presenter mode here. All right, there we go. Let me see if we have any questions out here that need answering. Are there any other low-hanging fruit ways to build business credit? Vanita asked that question. So I'm just going to say there are other ways. I know that, for instance, let's say that your personal credit is really just in shambles. It happens. No judgment here. And even though you're trying to get business credit, you just can't seem to get it. Well, try getting a secured business card. Banks offer those. Okay, I know for sure Wells Fargo does. And there are several others. You can search online and look for a secured business credit card. And a secured card is where you will put up money up front as collateral, and they put it into a savings account for you, and you get a credit card back for it, and then you use that card. You know, I think the rule is to use 30% or something of your credit. Do not max the card out. Use it for business transactions, and that's how you can build your credit. you know, that's another way you can do it, Vanita. I hope that answered your question. If not, please let me know in the chat. All right, we have Miss Danya who asks, can Connie give the name of her book?
I can. So that's the book, 30 Days to Launch. It's available on Amazon.com. And there's a bundle available on my website that comes with the business planning workbook. So.
All right. That's a very good book, guys. I just want y'all to know I read it myself. That's not a shameless plug. That's actually a good book to read. Also, let's see. Someone is asking, what is the first step to getting an EIN?
An EIN?
Mm-hmm.
An EIN is really simple to get.
Mm-hmm.
You just go to the IRS website and answer a couple of questions. But Jamila?
Yes, that's what I would say. Very simple. Go to the IRS website. You can /EIN, I think, and you have to first know what type of business you want to establish first. So before you get it, you need to know what's your business entity that you're establishing before you get the EIN. And when you get one, also know that they give you one copy when you do it online, and you need to make sure you print that copy and you keep that for records, because they don't reissue you the letter that has your EIN on it.
What I like to do is save it. They give you the opportunity to save it right there. I save it, and then, I just save it because I don't print anything. Maybe I should, but I don't print anything. But I definitely save it right then. And also, you have to have your business formation beforehand. You have to already be in the formation because they want that information. So you have to have your name, your social security number, your business entity, and what type of business you're in, what industry you're in, what you're going to be doing. And that's it. Yeah.
Okay, and then we have, let's see, Ms. Vanina is asking, if you filed for an LLC with your state, but not an EIN in 2015, can you still file for an EIN now before you file your taxes this year?
How did you do that? Because for the state, you have to have your, I don't know. You don't?
You don't. With the
Okay.
state, you don't have to have an EIN. So it's very possible, because there are two different things. The LLC is for the state, and then the EIN is for the federal. So there are a lot of people who don't have an EIN. They're just doing everything off their social, even though they have a business. I don't think that is necessarily a requirement, but it's easier to keep up with for the federal government to keep up with you, for you to establish separate business credit by having that EIN number. So yes, you can go ahead and file for it now.
Okay. All right, and let's see, our next question is, could your personal tax issues hinder you from starting a business if you owe the IRS a small amount?
Not technically. It depends on what type of business you're establishing. If you're personal, so it depends on the type of business that you're going to establish, because an LLC, disregarded entity, is separate. It depends on how you're going to file your taxes, because if you file your taxes when you do your taxes, if you file as a sole proprietorship, if you owe the IRS money, then they're probably going to take the money from your refund if you hadn't had any established something with them. But there are also things that you can do. I do representation work for clients who have tax-related issues of that matter. I do representation work because that's what you would need, is somebody to represent you, to kind of figure out what you're going, because if you're able to pay the debt, you may not be able to pay it. You may be insolvent and you just can't pay it. From actually establishing your business, you can still establish a business and do business even though you owe them.
Okay, thank you for that. And then we have someone in the Facebook event asking, if you sell an item to someone in another city or state, do you have to call that city or state to see if you have to pay taxes on it?
No.
I know that sales tax can
You
be
pay
very complicated.
you pay sales tax where you have a physical location. If you don't have a physical, it's just like when you order things online and they don't collect tax from you. That's because they don't have a physical presence in your state. And that's the big thing with Amazon, and that's why they were really fighting to change the online and how they collect that tax, because the states feel like they're missing out on revenue.
Okay. All right. And Miss Sherry is asking in the Facebook event, she says, I am the founder of a nonprofit, obtained an EIN and a DUNS number. Is the primary benefit of having a DUNS number to establish credit in the company's name?
Yes, that's the primary benefit of a DUNS number. Most of the time, is to track your business and establish credit for the business. But the EIN, so you do have she says she does have an EIN for the nonprofit, because to be a nonprofit you have to have an EIN. But has she obtained nonprofit status? Because you can have an EIN, you can be declared, say you're nonprofit, but then you have to make sure you get the nonprofit status through the 501c3 status through the IRS. But
And
that is,
go ahead.
huh?
Go ahead.
But that is the main reason for having a DUNS number.
Yes. And I would like to just add in, put a pin there and say that it is not required. A DUNS number is not required to build business credit. But
It's
it
not
does,
required. No, it's not a requirement.
but it does help.
Yes, it's not required.
Okay, then we have, what is the process for forming a nonprofit? Is an LLC needed or corporation?
You have to form it with the corporation, and they vary. Well, first of all, you have to know that the base of it is state related. So you have to do your state process, whatever the state requires for you to form your corporation. And then you have to exercise on the federal level if you're going to get your 501c. They're two different things. You have your state, then you have your federal. You're asking the federal government not to exempt you from taxes. So you start with your base, which is getting a corporation. And most states have not just a corporation, but they have a nonprofit corporation that you file for. And you go through the process of filing your articles of incorporation, creating your constitution and bylaws. And when you're doing a nonprofit, you have to be particular about the language that you use, because you are a nonprofit and you have certain requirements that you have to meet. And then you file that with the state, get that paperwork back, and then you can file for your 501c status.
And I want to add something in there from the tax perspective for a nonprofit. Most nonprofits, when they're established, they don't file their taxes, and you don't have a tax return. It's called an informational return. But if you don't file for 3 consecutive years, you lose your nonprofit status. You're revoked, and you have to go back through the process and do it all over again to attain your nonprofit status. So if you have a nonprofit, make sure you're filing the information return. And if your nonprofit is gross less $50,000 or less, it's a really simple form that you have to fill out, and it's not that hard. But I know sometimes some business owners can be overwhelmed when they have a nonprofit status, but you don't know what to do. But make sure you file those returns. It's called an informational return. Make sure you're filing those returns, because if not, you'll lose that status.
Good information.
Mm-hmm. Someone asked the name of my Facebook group. It is Purposeful Paid and Pretty. Purposeful Paid and Pretty. We answered this question already. Let me see if there's any more in the Facebook page. I think that might be it for questions. Let me see. I think I have one that might have just come in. Hold on. Will there be future webinars? I like that question.
Did you guys enjoy it?
Yeah, did they enjoy the webinar?
Find value out of it?
I believe they did. I'm hoping they'll give us some feedback. Despite all the technical difficulties, and yes, I hope to do more webinars with these ladies, and I just love teaching and bringing people information. So that is it. I don't think I see any more questions. Oh wait, one more just came in. Let's see. Do you suggest? Vanita says yes, please. Question is, do you suggest using a formation company like LegalZoom or do it yourself? Good question.
Oh, you almost made me curse. No, use Zoom. Don't use legal doom. Don't use legal doom.
And tell us why.
A lot of times, I've had clients who have used LegalZoom, and because there's no one on the other end, they're just kind of filling out the blanks. They don't know really what they're doing, so they don't have that person that they can connect with and ask questions with and walk them through the process. And so, a lot of times what they do is end up getting the wrong document. I would say that when it comes to business formations, some of them are really simple. If you have questions, you can always ask an attorney, and then you can fill it out yourself, or you can just hire one to do it, depending on what state you're in. I can help you. If you're in Alabama, I can help you. If not, you probably can call your local bar, and they will be able to assist you. But the process of, and I'll tell you this, the process is simple. As far as getting the LLC, I'll tell you, it's really the matter of filling out or answering a couple of questions. It's just a matter of making sure that you're doing and operating your business in the right way, that you keep that, so you can keep that limited liability status, is what you really want to worry about.
All right, and then we have one last question we're going to take here, and that is, if a trademark or copyright is needed, should it be filed before the corporation is formed on the state level?
That's a good question.
And
the reason that it's a good question is because it depends on who you want to own it. If you plan on owning that trademark or copyright, you personally, then fine, go ahead and file for the trademark. However, if you want your corporation to own it, then you might want to wait. An alternative, you don't have to wait. You can file for the trademark personally, and then once your company is formed, you can do an assignment and assign that that intellectual property to your company, and you can file the assignment with the USPTO.
All right. I think that's it for questions. I don't see anything else here. I'll check back on that in a little bit. But while we're waiting for any more questions that may trickle in, we want to share something with you guys that we put together just for y'all. Some great information. Let me get my screen going here so I can share it with you all. You're a do-it-yourselfer, passionate, working hard for your money, creative. We get it. But here's the thing. Did you know that 9 out of 10 startups will fail? This is a hard and bleak truth, but one that you do well to meditate on. That doesn't have to be you. Matter of fact, it won't be you. No, you are going to work smarter. You are going to work on your business, not just in it. And you are going to handle business processes. You know, all the boring stuff. So, what do we have? 3 information-packed self-study video courses just for you. 1 from each of us. Ms. LaKanya has put together Brand Legally, Structuring Your Business for Success with 3 modules. Plan for the success you want, minimizing business liabilities, and creating business systems. 3 modules just for you. Ms. Jamila has put together Business Foundations Built Right with 3 modules, Filing and Paying Taxes, Entities and Requirements, and Business Expenses. And I have put together the Smart Money Start, Money Management Systems, Setting Up Your Bookkeeping, Creating a Profit Forecast, and Tech Training with Wave Accounting. Now, I bet you're wondering how much we're offering this for. Is it free? Are you going to have to pay? I'm going to tell you right now. So each of these courses are valued at $197 each. Hold on. She's saying she can't see my nice little slides I put together. I want to share these slides with y'all. Let me see. Oh, share my screen. Here we go. Now you ought to be able to. There we go. Okay. Each of these courses are $197 each, valued at $197 each, right? That's a total of $591 if you buy them separately, right? $591 if you buy them separately, 3 courses, 9 modules, invaluable information, more of what you received today in more detail, right? Guess how much we're going to do this for? Wait for it. Your investment is $297. That's basically 50% off, half off for these 3 modules, 9 courses, and all 9 modules, and all of this invaluable information. Some of what we shared today, more of what we didn't have time to share, we are going to give to you all for $297. And if you get this bundle that we've put together before we log off of this webinar, we have also put together this fast action bonus for you guys, in which we each are going to offer 1 hour, free 1 hour consultations with whoever signs up before we log off the webinar for each of us. And what does that mean? So Miss LaKanya, if you haven't noticed already, she's a licensed attorney with 5 years of helping small business owners with trademarks, copyrights, and business development. Jamila is a tax practitioner with over 7 years experience and the power to represent you before the IRS. And I am a degreed accountant with over 18 years in the industry, helping small businesses manage their money. So, first of all, if you want to get this bundle, the link to get it is bit.ly/foundation bundle. All right, bit.ly/foundation bundle. If you get it before we log off, you get these 1 hour consultations with us. Jamila, Connie, any of you want to jump in here and say anything about these consultations?
First of all, I would say that a consultation, a free hour, that's pretty much an awesome deal. A free hour from 3 of us, that's an awesome deal. I know that personally, for me, that's a $275 value. If you want to speak to me for an hour about any of these issues, trademarks, copyright, business development, it's going to be $275. And when it comes to the course, it's the same. It's the same thing. You're getting tremendous value, and getting to speak to people, getting information from experts in 3 different fields. And you can't beat that $297 if you're not going to be able to talk with an expert for an hour and get this information, because essentially what you're getting, if you get an hour consultation and then each of the courses, that's probably over an hour and a half each. And 2, 3, so that's like, don't make me do math, 5, 4 hours, 4.5 hours, 3, 4.5, yeah, 4.5 hours of information that you're getting from people that you know and you trust and that have your best interest in mind. So if you have any questions about what's exactly in the bundles, definitely put them in the chat and we can answer those things. But I can tell you, as far as my bundle is concerned, I'm going to be talking about the 3 B's of business, because we have this mission of making sure that we have strong foundation. So the 3 B's of business: business planning, business entities, and business systems. You need all 3 of those things in order.
Connie, I think you're cutting out. Did you mute yourself?
No, I stopped talking.
Oh, okay. Okay. Jamila, you want to add anything there?
Yes, one thing that I think is very valuable with this, especially with the 1 hour consultation, we get very personal and relational with you. I know for myself, I have the experience of, as Allison said, what was the statistics on how many business will fail?
9 out of 10.
9 out of 10 business will fail if you don't have things in place. And I know that to be true. I was in business and I thought my business was doing very well, and I was profiting, I was making money, but because I didn't have the foundation of my business solid, I didn't have these systems in place. I didn't have the money management system in place. I didn't have the tax management. I didn't have all these systems in place that we were talking about here. I ended up closing both of my locations. I had two locations for my business, and I had to close the locations. So I had to step back so I can get some things in place. So don't let that be you when you have the opportunity, I had no one to give me the information, or this information wasn't out there, or maybe my eyes was wide closed. I don't know. So don't let your eyes be wide shut. When the information is here, where you can get it, you'll have us to be in relationship with you to give you this hour consultation. Is going to be very valuable. And when I found out this information, when I learned, I had to go through a lot of stuff to learn the information, it was so valuable to me. So you have it now, and you have it at a very, very minimal cost to you, but the value that it's going to bring to your life and your business is really invaluable.
Right. So if you want to sign up for the bundle, you'll get the 3 courses, which has 9 modules. You'll get the 1-hour consultations if you sign up before the webinar is over. And when you're ready to sign up, you go to this link. You're going to see a screen that asks for your login information. If you do not have, we're offering this course on a platform called Thinkific. Okay, and if you already have a Thinkific login, then you can sign in. There's a little link at the bottom that says I already have an account. You can use that link and sign in. If not, just create a quick username and password by putting in your first, last name, email, and password here, and then it'll take you to the payment screen where you can enter your card number and click the purchase button. After which, you will receive an email from Business Culture Cafe, Business Training Center, in which it will tell you, hey, thanks for signing up, here's your login information, and then you will get access to your course shortly thereafter. Okay, so that is how you sign up. bit.ly/foundation bundle. So I want you to say yes. Say yes to security, okay? Because you can rest easy knowing that you've taken the steps to reduce your business risk and liability. And I want you to say yes to savings, because organized records save you time and they save you money, because you don't have to pay premium prices for penny tasks. And I want you to say yes to systems. Walk away with the steps to take to set your business up for success, a strong foundation. Okay, say yes to those things. Say yes to having a successful business foundation set up. Say yes by going to this link, bit.ly/foundation bundle, and signing up today and getting all this good information. Again, it's worth $5.91. We're giving it to you guys for pretty much half price at $2.97. Can't beat that. I think it's awesome. And I really don't have much else, but I just want to leave you guys with this quote before we check one more time for questions. And I want to say, action is the foundational key to all success. Pablo Picasso said that. Action is the foundational key to all success. So I want to thank you all for taking action and being here with us this evening, spending time with us on your Sunday evening. Thank you for taking action and being here, and you're stepping up for your business and trying to get your foundation set up right. Kudos to you. Hats off to you. Good job. That is the gist of what we got for you guys today. Okay, let me just check one more time for questions real quick.
And I just want to add to what you just said. I don't want you come to this place, all the business owners who's come this far, and just leave yourself hanging, leave your business hanging when you have the opportunity to get the information that you need. Don't leave yourself hanging. Your business, if it's worth it to you, again, like you said, act now. Put the action into you coming this far. Don't come this far to leave yourself, to walk away and say, oh, that was great information. Trust me, the information we gave you tonight is not enough to carry your business on for your business to really operate, function with a solid foundation. You're going to need some more information, and that's what we're providing these courses, more information for you to operate your business effectively and efficiently so you can truly pursue profit while your foundation of your business is strong and solid.
Yes. So we have a couple questions here. Let me get those going real quick. It says, what is the deal with the rumor that filing your LLC in, I believe, Maryland? Wait, I think something's missing there. A rumor with filing your LLC in
Allison, I
Maryland.
have a question. What's the site? Please post the link to the site where the products are offered again.
Yes, I posted it. It's in the event. It is bit.ly/foundation bundle. Foundation bundle. And I'm going to post it here in the chat as well. Sunshine, I'm not sure where your question is. Can you retype that real fast? How long is the process to get a trademark completed, Connie?
It takes anywhere from 9 to 12 months. But your
Okay.
protection starts from the time that you put your submit your application.
Okay, thank you. And what is the process for forming a holding company? What is better for that purpose, an LLC or a corp?
It depends on what your state allows. I know some states have started, and Alabama just started, I believe last year, where they let you do a series LLC where essentially you can have a holding company and then create different umbrella companies under that for different businesses and their assets. So it depends on your state and what they allow.
Okay. All right. I think that's it. I don't see any other questions. So I know it's Sunday. Some of you may have to go to your investor tomorrow morning. And you know, some of us just, want to get back to our families or whatever the case may be. So we don't want to keep you guys. I don't see any other questions. Sunshine, you did have one question I didn't quite understand. I'm not sure if you're still there. If you can find us on Facebook or reply to the emails that you're receiving with your question, I will see if we can get that answered for you. All right, so don't forget, go ahead and sign up, bit.ly/foundation bundle to get your fast action bonus, 1-hour consultations with each of us. I'm so happy that you guys are here, and I'm just so pleased with everything. Connie and Jamila, thank you so much for sharing all your invaluable information with everyone and taking this on with me. I really appreciate you guys.
Well, I thank
You're
you for
welcome.
inviting
Awesome.
me, thinking enough to let me join. I really enjoyed not just tonight, but just working with you ladies just in general. And I want to thank everyone who took the time out this weekend and who are with us right now, getting this information. Kudos to you for doing something to make sure that your business is not 9 out of the 10. And you take it one step further by signing up and taking these courses and taking advantage of the one-on-one consultation. I mean, even just the value of the one-on-one consultation itself is worth the $297. Being able to talk to an attorney one-on-one about your business and what you need. Being able to talk to an accountant one-on-one about your business and money systems. Being able to talk to an RSEA agent one-on-one about your business in the tax perspective. That in itself is worth it just by itself. Did we price that right?
Well, if we didn't, it's a steal. So hopefully they take advantage of it before it goes up.
Because it will go up. That's another thing too. It will go up. It's $297 now, but it will go up. And so we will tell you that. Not only if you don't act now, you won't get to take advantage of the consultations, but also the price will go up.
Yeah. And we're not sure when, so just jump on it if you can. And I don't see any other questions. Like I said, I want to value people's time. I thank you guys so much for spending your evening with us. If there's nothing else, I think we can go ahead and sign off.
All right. Well, y'all take care. Have a good evening.
All right. Bye-bye, guys.
All right.